Yeah, if anyone can't get on the call, then yeah, at least they can get this later. So Mevin just joined. So yeah, so basically, some people are having issues understanding the bias and saying, well, like in the case that we've just had in the forex chat, then they were saying, well, it ran these. Why didn't it go long? Well, the problem you had with the image, I'll go over to Discord in a minute. You've got a larger level of liquidity there. Okay, so just because you run these equal lows and you can break structure and go long, you've got to take into account that there's other levels of liquidity. So it'll take like short-term liquidity here to move higher to take all this and then drop. Do you know what I mean? So like Baz, you understand what I'm going on about. And like once you run this, you've then got levels underneath, right? So if I go to share screen now and I go to the Discord, okay, and then I'm going to find that image that we were just talking about. Okay, so so basically somewhere up here, one of the guys said he was watching video 7 out of 15. So I got this message last night, but I didn't have time to respond, right? So he said, well, you know, how do you tell a directional bias when it runs this liquidity here by using this? And you're looking for longs. It's like, well, yeah, but you've got to look at all this structure here. There's way more liquidity up there than there is underneath that. Yeah. You know, and when it came down here, so look at these lows here, this here and this here has now created another set of lows, right? So I always talk about don't trust a new set of lows because they're going to get ran. So as I've gone down here now, I've responded to him, put a box around it and said, what are these? So you know what it's done there? It's run short-term liquidity under here with this run here. And then you're looking for longs, but you've got to take into account if you're coming up to a large level of liquidity like that, the chances are it's going to run that and then reverse. And here it's done exactly that, put another level of stops underneath there to run them. You know, so you've got to keep that in mind. So I'm going to go back to the chart I was looking at, right? So this is what I'm getting at here. It's a similar sort of thing here, right? So you've run through this here. So these wicks here have run through these lows. Now, right above this is going to be fucking tons of stops up there, loads of them, right? So if you're looking for longs based on a little run on lows here, and you're looking for longs into all this, you got to be very cautious because I'm expecting a short on this into next week, right? So you've got these lows here, you've got low resistance liquidity all under here. You've got lows down here. Okay, that fucking excuse that as from an old setup. All right, but we've been going up. Like if I zoom right out, this is only an hour chart. We've been going up forever. I mean, look at it. It's just been going up since what? January. Well, January here. Let's have a look. Even down here, beginning of January, it's just been in a complete uptrend. So now, if you look at the market now, we're starting to put a top in. You can see the difference, can't you, Baz?
Yep, absolutely.
Joey, so now
there have been many setups already in this pair.
We've taken one after the other, mate. We've had loads, like, you know, over and over and over. Like this one here was that one we did a video on right there.
Yeah.
See the equal lows run through, complete structure inversion, and it was a single structure retest, but it just went forever.
And you kind of need to look at, you do keep the larger time frame in check because you want to see what the larger time frame bias is. And if you look on the larger time frame, like the daily, you will see that it's currently at a daily load level, which means there is a lot of resistance there.
Yeah, and so if we go, like we were talking about this yesterday, weren't we, Baz? The fact that at the moment now, this is what Euro USD JPY looks like at the moment. It's just been going up and up and up, right? Well, right here, there's a load level, right? And we talk about load levels and price acceleration zones all the time. Now, the load level is the bottom of that candle there. And we've also got a price acceleration zone that needed filling in here. Yep. So if you come to this point here, you've now done it. You've filled it in. You've hit the load level there. So now, in terms of looking at this as a potential long, just because it's running, I'll have a look in a minute on GU as well, mate. But, you know, we're in that load level now there. Right, now running, if you're looking for a short, if you're expecting short on a higher time frame, you want to see a massive accumulation of highs here because it's going to take all that liquidity and it's just going to really burst away from it. So I think we're going to come in for a massive short next week, right? But just because it takes short-term lows out here, if it's got all this above it, you need to be getting out at that level. You know, like ICT says it all the time. You don't want to be buying above old highs. You know, when you get a level of consolidation like this, you got to think about, right, what is it starting to do? You know, the market's clearly gone into, you know, sideways motion. So it's ready to do something else other than just go up. You know, especially when you start putting the like lows in here, it's just wicked through them a little bit. You've got all this above it. It's like going back to that image on Discord. It's like seeing, it's effectively the same thing, right? So if I remove these drawings, right, I'm going to try and sort of relate this to it, right? Now, if I go back to share Discord, okay, and we got this image here. I'll go to his image because he didn't have the box on it, right? So, okay, so you've got equal lows here, okay, they get ran. You've got all this liquidity above here, gets ran, okay? Now I'm going to go back to trading view. You've now got, let's have a look. So these lows here, they've just been ran, okay? You've now got all these up here waiting to get ran. So it's the exact, it's pretty much, Baz, the exact same thing, isn't it?
Yes.
You know, the only thing is now, like here now, you could say that now it's printed all these lows, definitely an equal set of lows there.
Yeah, exactly. I mean, you could consider those to the left now being run in the
Yeah,
middle
all
of the
these.
structure.
Yeah.
So in the middle of this particular structure, you could say, okay, those two equal lows in the middle of this whole frame could be considered run now with the ones to the right. But as you see, there's already additional pairs being set up, additional equal lows being set up. But there are, in the interim, so just, you know, intraday trading is definitely possible in here because you look for that structure, the 4-step setup. But on a larger time frame, what I consider as well is that if you look at the daily time frame and your bias is that it is running into a load level, what that means is that you then look on a smaller time frame for a consolidation zone, and when it then reaches up and goes through these equal highs that Darren has highlighted, then you know that there is a potential short forming because it's running the liquidity above it to then pull it down. So higher time frame, sorry, is therefore you're going to consider that as bearish. But short term, it could be bullish to then turn bearish and follow the daily trend or the the weekly trend, even if that's what you're doing. But I guess the problem for quite a few people is when it comes to your bias, you need to understand that if you're in a long for now because you feel that, okay, it's run the lows, it's now going to go higher, it doesn't necessarily mean that it's going to go 50 or 60 or 100 pip. Okay, that's the thing that you need to look into, because you need to then start aiming, because you're at a high time frame load level already and a sort of a retail resistance. You need to consider taking off your position earlier at specific load levels. For example, at 109.10 here on the left on Darren's chart, you could have gone long potentially in this setup here at the first set of lows. But where would you have taken profit? Would you have waited all that time to go when it goes above the highs? Well, maybe you would have, but you could have also lost it because it literally could have just reversed there. So it's always important to take that in consideration when you think high time frame is bearish, or we're looking potentially to go bearish. We're now looking low time frame setups to basically put itself in line with the daily trend or weekly trend, whatever you're looking at. So that's important to take in consideration as well. But I do agree with you, Darren, here. This setup is, or this potential setup forming is quite nice. Attacking those highs potentially sometime in next week, creating the high of the week, and then turning around. But again, guys, just wait for the structure to break before you enter a position.
I think that's the problem people are having with, you know, we talk about it over and over again with patience, and it's like people understand you need to be patient, but they don't understand sometimes how long you have to wait. Do you know what I mean? It's like saying be patient, but it's like, well, how patient you got to be? Well, as long as it takes. you know, because in this case now, anybody that went long on this low here would have trailed stops to here, okay, when it went higher. So would have trailed stops to there and got stopped out here. Now, if they didn't move their stops and they're still under here, they may have trailed them to here now, right? But if they haven't again, there's still stops sitting under here. So regardless of whether they've moved them or not, we've been talking about this now, Baz, for it must be 2 days. This specific pair, 2 to 3 days we've been talking about it.
Yeah.
You know, and it's
Just
like
setting alerts. That's all we're doing. Setting alerts for price
just
to
waiting.
break something.
You know, because we might find today this might run today, and you know, if it gives it like a pullback, then a run, and then suddenly rejects like fuck today. Yep. Well, Monday, all we're looking for Monday, then we're looking for a retracement back up, potentially Monday, Tuesday retracement back up to our load level to then get short, and that's what we're looking for.
Yep.
But it's like he's saying, which way do you know it's, you know, which direction is it going? Well, I don't like. I know you pay attention to the higher time frames, but I'm not, I go through too many pairs to sort of do it. But I look at levels like this and I say, right, this has been run, but this is really clean. Now we saw it on let me have a GBP CHF, I think it was a couple of weeks back. It was that 5-minute setup I took. Let me just have a quick look now. Yeah, guys who are in the call, if you want to unmute, feel free to unmute yourselves. You know, we can have an open discussion here today. We're just going through some stuff. So, like, look at this here again, right? This is GBP CHF on a H1 now. Okay, now let me just remove all this. Okay, now I don't need to see much of this right now. All I look at this for now, I say, right, okay, we've run these lows. Okay, we've broken structure here. Okay, so yes, we have got a potential long, right? But look at the fucking liquidity sitting there. Do you know what I mean? To me, I wouldn't want to be holding through this to try and expect higher prices. To me now, I don't even need to look at what the higher time frame's doing. I see this as a sucker's drop because you've got the resistance. You got the sucker's drop, or if it was the other way around, to be a sucker's rally to get people thinking it's short. Okay, you've now got all the stops sitting above here. From my perspective, I'd be looking for a run on this because there is loads and loads of stops sitting above there. And I'd look for a run on that, then a reversal. And that's what I look for. You know, like I've talked in my videos about equal highs, but like to me, I don't mind a double top, if you like, but I like to see this. You know, you got multiple touches. See how many there is here. Even this one, you can count this as a tap to the high. So 1, 2, 3, 4, 5, 6 highs. Okay, if I scroll to the right, I don't know if there's much in there. No, there isn't, right? But this is what I like to see, Baz. I like to see when you get a level where there's going to be a massive accumulation of stops. If that gets run and reverses, it's game on for me. Like, do you know what I mean? I'm just going to take that short with everything I got. Exactly. You know, straight away, I'd take it straight away. There's a nice small set of equal lows there. That'd be my first target. I'd probably look to get out there and that'd be me done on that trade, right? But if I go to, let me just see if I can find it first. Well, there it is there. That's the setup right there. So let me just go back to the replay feature. Okay. Go back to here and I'm going to go down to a 5-minute chart. This is something I've gone through this a couple of times over the last few weeks. This specific setup, and it just went forever, even after I took my profit out. Right, so I'll just quickly play this through, right? And
Darren, I'm gonna have to go.
That's okay, mate. No worries.
But, I'll speak to you soon. Yeah.
Yeah. Cool. Okay.
Cheers. Bye, everyone.
Bye. Right, guys, if you're available to chat, drop messages in there, whatever you want to do, right? So going back to you know, liquidity levels, right? Here, technically, we have run a small set of equal lows, okay? But where is the most liquidity sitting, right? It's here. There's more liquidity sitting there than there is underneath that. Okay, now when you've run through that, exactly the same as what we've just gone through with that chart in the forex chat, you've now put in another set of lows. Right, so you need to think, if they're leaving these lows in, what are they doing? They're trying to go after this in order to do something up there, right? So then you have to just be patient, okay? Now, as we play this through, it might take, you know, 5-6 minutes to get through this, but I just want to sort of emphasize the importance of understanding just because you run a short-term set of highs or lows doesn't necessarily mean it's going to go in that direction for a long space of time, right? So you need to look at where the most liquidity is. Okay, so let me just speed this up a bit more, right? And we'll just get on with it a little bit.
Daz, it's Gaspy. When you're done, check out GU.
Cool, man. I'll have a look in a sec, mate. Cheers. Cheers for dropping in, mate. So, like, I've gone through this. Like, this is one setup I talk about over and over and over again, because to me, it was a perfect example of what I'm looking for. Now, we've run these equal lows here, through there. We've got an equal set of highs there, another set of equal highs there, and another set of equal highs there, right? Now, just because this is breaking down doesn't mean anything at all. It's not a trade. It's not anything that we should be looking at, right? But now what you've got is another low to put in with these lows. Okay, so now you're effectively in a range. So at the minute now, they've built up liquidity underneath here. They've built up liquidity on top, right? Now, in this case, you've got 1, 2, 3, 4, 5, 6, 7 taps to that high. So that there shows retail that there's massive rejection of quote unquote resistance, right? Now, if I keep playing this now, okay, eventually it gets ran. Okay, so when you're looking at this now, you're not looking at these shitty little lows here. There's fucking loads of it across here. Look at it, right? That is the low right there that caused that move out of there. Okay, so you're looking for a break of this specific low there. Okay, now this is a 5-minute chart. It was a New York setup. Okay, so once you've got the run on stops, you've now got the instant rejection there. Okay, you're waiting for the breaker structure. Okay, now you've had a breaker structure. Okay, so that's confirmed there. Now you've had a run on much bigger liquidity level. Okay, rejection, breaker structure, go to your load level, which is that up candle right there. Okay, and then you're looking for lower prices, right? You should be looking at this here, not as a double top. If you look at the wick that came out of it and the fact it went straight and rejected again, that there is trap buyers. So anyone that chased price here now is trap long. So it isn't going to want to go too close to this. All right, so you could say that this wick came up into the bottom of this load level here, which it did, but it's not the setup I was looking for, right? So there's the last up candle there was the load level, came there to the pip. Okay, so it's not that I'm trying to get in on. I want to see the breakdown of structure, right? So if I speed this right up now, okay, and just put it out here. So you've had the run on the highs, you've had the price rejection, you've had the breaker structure, and I'm going to play it there, and you'll see how fast it just went away, all right? So it comes up, taps there, that's the entry right there, and eventually it just literally just drops forever. Okay, so if I keep moving this here now, okay, so you get the point there, right? So it's literally, although I talk about equal highs and equal lows, if you've got a large accumulation of highs above, right, and you run smaller lows, the chances are you're going to run the liquidity here in reverse, which is the exact same thing we're about to see with USD JPY. So going to UJ, hourly chart, it's just on a bigger time frame. That's all it is. We're now seeing here an accumulation of highs here. Okay, so there's going to be stops sitting above this. So regardless of what happens with these little lows here, I'm more interested in this high. Okay, so for my directional bias, if it's just broke through and continued high, right, I'm going, right, okay, whatever, I'm wrong. But I'm not interested in running this low to try and target this high, because there's a lot more liquidity there that likely going to take and drop. They're going to drop pricing. Okay, so in terms of Mevin, I'm just going to catch up before I go through your chart, Gaspy. Mevin says, is it seen as a whipsaw? I think, were you talking about the whipsaw when we were talking about the UJ trade right down here? So this was that setup we were talking about right there. If I zoom in a little bit on there. Okay, now I know you can't see it very well on the hour chart, but there is a set of equal lows here. Okay, price rallied away. Then we came in for our price structure inversion zone there. So our SIP, okay, structure inversion point. So once we came in there, it was a single structure retest and it just took off, right? So you could almost call it a whipsaw, but a whipsaw would be a lot worse than that, Mevin. You see it quite a lot in London. Seth says, would you have still kept the sell limit if it broke the equal low after the breaker structure before retesting? Would I have still kept the sell limit? On what pair now? On the GBP CHF, was it? Yeah, GBP CHF. So like I've said before, mate, if it doesn't give me the entry, then I just move on. All right. So, you know, these were really like, look here, see how clean those lows are there. Okay, that's what it was looking to target right there. Okay, so you can see them there if I highlight them. Okay, right there, and that's what it did eventually target. Okay, so it was running anyone that trailed the stop there. It was running them out before going. But like I said, it's if price just if this drop occurred and took out equal lows, I wouldn't look at that as a setup anymore, because, you know, to me the targets have already gone. Okay, so I wouldn't be looking at that anymore. Yeah, Mevin. So you go, like I said, you're going to find, like here on a smaller time frame on pound Swiss, you're going to find setups, right? Like there's a small swing point there before there. Yeah, can you see it right there? A small swing point which ran the stops. It broke there, came back down into structure. This wick probably filled in something here, so there's a slight price acceleration zone there. Right, so you may have got a smaller time frame set up there, but you know, if you go up to like an hour chart and you see levels like these, or you go up to a 15-minute chart and you see levels like these, it doesn't matter what level what time frame it's on. If you zoom out and you can see stuff like this, because you, like when I go to the chart, if I'm doing my streams, you never see me zoomed in on a chart like this. Do you know what I mean? Most of the time, right, when you're looking at the streams, you're going to see my chart looks more like this, where you can't even see the candles, because what I'm doing, I'm looking for structure and going, right, what is going on? Okay, so at the moment here, there's clean lows. See them lows there. So, you know, I'm not even analyzing this much, right? But at the minute now, we seem to be going in a range consolidation, see it? Okay, now at the moment, I wouldn't be looking for any longs or even shorts, because as far as I'm concerned, they're going to get ran again. Okay, now if we come down, run them and instantly reject and give us our setup and break a structure long, I'd be looking for a long straight to these highs there. Okay, then if I get my profit off there, you could potentially run these out and maybe even this up here, because you've got these here. Okay, so these highs here, but I'm not in to try and look at equal highs were also present. Yeah, you got equal highs here again. So if you run the lows, you've got equal highs to take out here, and all along here. Okay, so they're all there, but you have to wait and see what happens with these lows. And like I've said in the other videos, this could, for all we know, right, it could just go down, make another set of lows, drop through, make another set of lows. Do you know what I mean? And then at some point, you're going to get a run through, instant rejection, and then you're looking for the pullback to go long. Right, but at the time of these lows being printed, even if it breaks, even if this point here breaks structure to there, I'm not interested, because all that to me says is going to be doing is running these highs out to grab the liquidity to then drive lower. Okay, so if it prints clean lows, like sometimes they're going to stay intact, and you know, if it happens, then I'm not really going to cry about it. But you've got to have something in place to say, right, if there is equal low, or some way of trying to eliminate shit decisions. Okay, so that's the way I look at it. So, you know, going back to that chart that we just had, Mego, you said, well, how do you know what direction it is? Well, where is the most liquidity? Okay, so yes, it did run lows, but it was a lot above. You know, going back to that video that was just mentioned in the Discord group, there was a lot above, and that's what I was interested in that video. I see the levels of liquidity, and if there's, you know, if you've got, so let me just pull this down. The way to look at it, if you've got something like this, right? So we'll just put this in really, really quick, right? Right, so at this point here, right, you've got to think about this, right? Where is the most liquidity on that chart? Because it isn't under these lows. Do you know, you look at it and you think, right, well, look at those highs there, all of them. You know, so I'm not interested, like, at all. If I can see levels, fucking get rid of this bastard thing. Right. If I can see levels here that might get ran, I'm not going to be looking for long because I see these levels and think, right, they're the ones that are probably going to get ran to reverse. Yeah, most prominent, Mitchell. Exactly that. Was it you that dropped the chart in the I can't remember who dropped it. I don't think it was Mitchell actually. But you want to look for the most prominent. That's the best word. You know, thanks for putting that word in it. It's the best way to describe it, because if you've got like 20 highs and then 2 lows, the chances are there's more sellers in the market because stops retail see it as strong resistance. So what we're waiting for is that prominent level. So yeah, again, going back to Mitchell's word, prominent. You know, it's understanding that. Now, these lows could stay intact until this gets ran, and then they'll just run it all through the whole thing. You know, so that's what you got to look at. You got to look at the most levels. You'll see most of the charts that I look at when I do take trades at win. It's normally on levels where there's a lot of bounces, either whether it's been lows or highs. It doesn't matter either way. But you're looking for a good run on liquidity. So the longer it can stay intact with equal highs or equal lows, the better the run's going to be. You know, like if you got a double top, some people don't notice a double top till it's already long gone. You put a triple top in, people go, oh, I saw the double top, so if it bounces here, I'm going to get in. You put a 4th one in there, it's like, fucking hell, look how strong this level is. You know, and then you put a 5th one in, it's like, Jesus Christ, we've got to put the whole fucking account onto it. You know, and then suddenly everyone stops sitting above there, they go and run through the highs, and then they just grab everyone and take it the other way. You know, so you just, that's I think that's something I need to explain a bit better with the group. Like I talk about equal highs or lows, but you know, the more you get in a level, like going back to that GBP CHF trade, there was six or 7 highs, you know, in one area. You know, it's absolutely perfect. You know, when you start seeing levels like that, I'm not looking for a position into that level. I'm looking for the run on it, reversal. You know, and that's why I say when I say like be patient, you know, if you can wait for setups where there's loads of stops accumulating, you're going to have one hell of a trade. Even if you only get 2 trades a month, there'll be really, really good trades. All right. So any more questions, guys? Gatsby, drop your mic on, mate, and let's go through what you were talking about. What chart was it?
Yeah, so it's GU 15-minute chart. You got 10 pip run below this, you know, right before it took off on the news the other day. 10 pips below as it's coming in on this load level right now.
Give us a sec, mate. So GU 15. All right, so
it ran up. It never touched this load level down here. And 10 pip, and it's right 10 pips below that low.
Yeah.
And then you got all the highs sitting above.
Yeah, so this is it again, guys, right? It's talking about the fact that you've technically run highs there. Okay. Are you looking for shorts, or are you looking for something until you get above all this? Because at the moment, to me, that is where the liquidity is sitting. Okay. Now, I'm not really interested in, like, I know Gatsby, you like to trade load levels into it. I'm more of a, you know, I want to see that get ran and then reject. And then I know we're onto a winner. Like if I go back here, look how many levels are in it. You know, so yeah, you are right. But with me, I get burnt quite a few times trying to trade back into those levels. So I like to see them get run first and then reject. You have got a little bit of structure here as well, which I don't think that'll get run. That's probably reacted as a load level there.
Yeah, I've got like a 6 pip stop loss on this.
Yeah, so you got a load level there, which reacted from there, which then put another load level in here. So potentially, if it reacts off there and goes long, take out them highs. We'll see where we're at next week. But if we can run that, and then UJ, we're looking to drop, aren't we? So yeah, we'll have to wait and see what happens with that. So Mitchell says, would you say you're looking at trading trend direction on the higher time frame, say 1 hour, taking equal levels, trend up to the point where so you can do that if you've run higher time frame clean levels, then you've got the rejection reversal. You just have to bear in mind on, say you're looking at a daily time frame, at some point you could have potentially 1, 2, maybe even 3 weeks of retracement back up to the the double structure retest, right? So you do get the directional bias, but the problem is because you're on such a high time frame, you're going to at some point have a swing point back up into structure before it continues in its new direction. You know, so you know, I don't really like to look at too high a time frame. You know, it's not really I don't really care what the weekly and daily are doing. Like sometimes I go to a 4 hour occasionally, but you know, normally I'm normally on a 5-15 hour max. You know, so but yeah, Gatsby, if that plays out, then it could be pretty good trade. Like, but we'll have to just wait and see. But like I say,
the main thing that caught me was, you know, you got that swing low there before it really took off, and it never touched that load level, and it's 10 pips right below.
Yeah.
So we'll see if it bounces out. I mean, it's.
Yeah. Well, guys on the call, right? It's like if you're looking for, you can apply the same concepts to the higher time frame, but the trouble is, like, if say you've got a 4 hour double structure retest that you're waiting for a retracement back up into, you could potentially have 5 minute charts. You could have 7, 8 or 9, 10, 20 trades up into that level, you know, throughout the time it takes to get there. So it's just sort of depending on how long you want to wait for a setup. You know, me personally, I'm starting to be more drawn, you know, with what I'm doing. I want to be focusing on these levels, like not just double bottoms, double tops. I want levels where, you know, where it's clean. Like going back to UJ again, you know, we've got, you know, the highs here. Like look at them. You know, I'm not really interested in, you know, I used to trade just levels like this, and you know, sometimes I might get, if I'm lucky, I'd get 2 trades a week if I'm lucky. Right. But that would be 5 days a week trading. But, you know, when you're on a higher time frame, like an hour chart, you can just flick through the charts, take your 20 minutes, see if you've got these levels in, drop your boxes on it, put your alerts on it, and then just leave the chart alone. When it gets ran, come back to it and say, right, where's the level I need to break? You know, on the reversal, mark that. If that happens, then you get an alert. You go back to the chart and say, right, where I'm looking to get in when it comes back up. Just set your limit order and let it go. You know, it's that simple. And I think, you know, with the streams, I'm probably going to go more towards that way because, you know, I don't like trying to force trades. And what I feel what we've been doing recently, Gatsby, with, you know, with the streams itself, is you're almost under pressure to prove there's a trade there, you know, and you end up taking trades that aren't really what you necessarily consider a good setup.
Yeah, I mean, that's never a good approach to be. I mean, it's always easier said than done. And especially, you know, we talk about the psychology and stuff all the time, but letting the trade come to you, you know, you should be spending 70 to 80% of your time mapping stuff out and anticipating things. And if it doesn't come, hey, no worries, you know, but at least you were sticking to the concept, sticking to the pattern. And if it forms, then you take it, you know? Yeah. So people always ask, how many assets should you trade? How many this and that? It's all based on your time, what you're comfortable with, and also, you know, based on, is the pattern forming? You know, you can follow 8 to 10 assets and only take 1 trade in a week on 1 asset pair. You know, you should be spending more time studying the charts and see if it's, you know, playing out to what you thought it would, rather than just, you know, opening up a chart and where's the pattern, you know?
Yeah. Yeah, see. We're going back to the chat. Who's just asked this now? Mitch is asking about my Euro New Zealand trade yesterday, right? So basically, right, so what you got to look at when you get a fast move down like this. So we were looking at the news coming in, and we already wanted to see all these levels ran, okay, because that's where all the stops are. Okay, now this is where people get caught out. Okay, so the stops underneath every single bit of this. Okay, especially like when you got clean lows like this, there's stops all the way through it. Now, when you get a fast move like this and it takes out all the structure here, okay, you've got to look at that as a stop run. Okay, it's not they're moving price that direction to keep it that direction. They're looking for a reason to go and grab all this liquidity to move higher. Right now, if you take this high here, it's very, very close to this high here. Okay, so you've got an equal set of highs there. Okay, so all I was looking at in this, really, I had an understanding that we've potentially run stops. Okay, now if I break this, I'll break this down a little bit. He just wanted to know, his question was, let's have a look. Did I wait for price to break the 1 minute structure at my level to confirm the intention to change direction? So already in my mind, I was already thinking, well, we're likely going to go long after this. Okay, so that was my mindset. understanding that. But as we go through this, I did a trader development series video on it. You know, we did the equal lows. Okay, we did run through. Okay, now at this point here, that should be pretty obvious what's gone on there. Okay, now I know we've got highs here as well, and sometimes we have had a whipsaw recently, but the fact that we've come down really fast like this and then had that rejection there indicates to me that we're potentially looking to go long. Okay, so it didn't really take much for me to sort of have an understanding of where we might go from here. If I go to a 15-minute chart, let's have a look. 15-minute chart, and we talk about it all the time, you know, our price acceleration zones. Okay, so my target was 50% of this level here. Okay, so if I take that, and then get rid of 62, 79, 705. Okay, so I was just looking to target 50% of that level there. Okay, so it's taking the wick of this green candle underneath and the highest wick in this swing point, which is that down candle there. Whatever's left in between those two wicks is your price acceleration zone, right? So you're looking for that to get filled in effectively. Now, as price started to go away, okay, like I said with the 5-minute chart, I was looking to try and get. Let me have a look. I was looking to try and fill in this small price acceleration zone there, and then come into what would have been a 1-minute load level. Okay, so I was looking for a potential move to this point here. Okay, because that's what I felt was ideal for the impulse away, because it did effectively cause this breaker structure as well. So I was looking for a move into that, and I didn't get it. Okay, now if I go back a little bit, let's say we go to here. So I was still looking for a price to come back in, but as soon as we started making higher and highs and higher lows, I was like, right, okay, we're probably not going to make it down there. You know, so I already run the liquidity there, already had an impulse away, had a pullback there, started breaking structure to the upside. And I was like, right, okay, well, I need to find an entry. And my entry was at that load level there. Okay, so if I play that now, okay, and eventually it does come down there, right? So, but yeah, I didn't really need to have, you know, a directional bias for it. I'd already seen the massive drop we had. That was the entry there. And it did come back down a couple of times to retest the same point. But eventually it did take off. All right, so this was it, and this was the target. Where's the 50% at this point here? Right, so like, you know, this is why I say don't move your stop too soon, because it had 3 taps to the same level. But you know, it's still a well thought out trade. You know, it came in London. I'm not really a London trader, as I said, but you know, with that, and that was the target right there. Okay, so you know, all this whole idea stemmed from that massive drop there. Okay, so I was already expecting us to come at least to, if it was going to continue lower, at least have a retracement back up to this level. All right, so I didn't need to have really a bias in mind. It was all to do with that, just that big drop there. I was like, right, there's that big drop. We're going to at least go and fill some of that back in. Okay, Mitchell. Yeah, that's what I mean. Once price started to make higher highs, high lows. Oh, yeah. Okay. Yeah. Since it didn't come back all the way to my level I wanted, as soon as structure started to show movement away, I was like, well, I got to find the way in. Yeah, so yeah, and so rather than the load level, yeah, it didn't really hit. So yeah, because structure started moving away, you've got to start thinking then, right, okay, so the damage has been done in London. We've had to move away, and once we start to make higher highs, the chances of it coming back under here, back into this is very unlikely. You know, it could have done, you know, but I was happy to get in at this point here, put my stop underneath and just let it run and see what happened. You know, but overall, just because we had that massive drop there, that was the idea behind the trade. See, so, you know, massive drop, look at it consolidate straight away, put nice, like when I talk about lows, how many lows are there? 1, 2, 3, 4, 5. It's not just a double bottom. You know, there's a large accumulation of stops there, see? So does that answer your question, Mitchell? Good stuff. Okay. So this call's doing a little bit of good then. But yeah, I wasn't going to get on a call today because we've got a few things to do, but I've got a little bit of time at the minute. But any more questions, guys? Anything at all? So there's 9 of you in the stream. Some of you have got to have something. any question. You can unmute if you want. If anyone wants to unmute their mic, you can.
Hey, go to just to show an example. I bought this stock. Go to CLVS. Do you have access to stocks?
Yeah. What is it, mate?
It's called CLVS.
CLBS.
Now, this is a prime example of show me a chart, I'll tell you the news. So I'll tell you what happened.
Is this it?
Let me see.
Caladruce?
No, it should be Clovis Oncology. CLVS. Sorry, V is in Victor.
Oh, okay, mate. This one?
Yep. So I was buying this stock all week. Down at like 535, 565.
And I'm going to go on to a high. What time frame do you want, Gatsby?
Go to a 4 hour.
Yeah, man, that's gapped.
Yep. They released some stage 3 cancer development thing, but look at the chart. I mean, it's all there. You know,
Yeah.
I mean, look at that wick to the load level.
Yeah, guys, right. So this is what he's talking about, right? So you've already had this run on lows here. Okay, you've had a fast move away. The load level you've got is right there. See that down candle there?
It hits it right on the nose.
Right. So this is stocks, all right, guys. So and this is Gatsby saying he's been buying this all week.
The thing's up 50% today.
So here you go, look, right. So that is it right there. That's the last down candle that caused the move above structure. Well, there was one there as well, slightly, but that's the big impulse move there.
Yep.
So that's the load level right there. Came down, hit it to the absolute pip. And now look at it.
So again, I mean, it's the whole everything, just so everyone understands, it's kind of a hard concept to understand. And some guys, if you've never been in traditional finance or anything like that, it's a little easier to understand. But this is 100% manipulated. When companies release press releases, stuff like that, they're looking at the charts. You know, they know when to release things and when to, send the news out. You know, so it's in every market: crypto, commodities, stocks, forex. It's everywhere.
Yeah, it's like we've seen it before where you'll have, I don't know, let's go say we've got really clean lows, and they'll wait all week to hit it with like non-farm payroll or FOMC or interest rates or whatever they want to use. They'll just hold it there until they're ready. And as soon as they smash all them stops, then it looks like the news did it. You know, like in this case now, like Gatsby said, they've released, what was it, Gatsby? They've released the information?
They had some breakthrough on stage 3 ovarian cancer.
So
they're an oncology.
They come out with that news, but look how they've released the news around the same time they're ready to take off.
And if you scroll out, go to a daily chart. I mean, this thing could go places. Like it's come down, taken out so many lows, taken highs. Like, scroll back a little bit. You'll see like the whole big picture at like $11. You got even high sitting there. I mean, look how many times it's come down to a load level, taken off, taken the high.
Well, there's a load level right there.
Yep.
Straight into
came
it
up,
there.
took that high, came back down to it, launched again, came back down to a load level. Like, this thing could just, I mean, from here, look at the gap sitting up at like
that's going to rocket straight away. That is like,
yeah, I mean, that thing could run to $23. I mean, look at the gap up on the daily chart at $23.
Yeah.
So yeah, I mean, it's just, it's the patience, it's following it, it's trusting it. But yeah, I mean, look at that gap where the first time it broke through all the way up at 23, 24.
I've got a chat box in there somewhere. Where are you looking? 23.
Yeah, like right in there.
Yeah. But I see it like with the trades as well. It's like I like to take the first. So when you get the first run on major stops reversal, I like to take that and then get out. I normally get out within the first impulse. So if I'm trading a 15 or a 5, I'm normally out during the first 1 hour impulse move. Do you know what I mean? So, you know, the 1 hour chart, I'll have one impulse before a consolidation pullback. I normally just out by then and just can find another pair. I don't want to hold through a retracement through a day, through a night, through another day.
Somebody asked a question. Gatsby, if you're using more of the higher time frame load areas of interest, how many pairs are you looking at? So I only use on stocks because if you open these charts, I mean, they're a disaster. I look at only daily for stocks. And I usually only look at them on Sundays and Mondays. I'll check, I'll set alerts and stuff like that. But for Forex, I'm with Darren most of the time. I'll look at a 4-hour chart just to get the bias of where I think it might go. But again, when you're dealing with a 4-hour chart on Forex, I mean, depending upon how much time you have to dedicate to the charts, they're good to keep in mind and give you a bias. But again, it's more difficult to trade Forex on a 4-hour because you could be waiting a long time sometimes. And there's plenty of pips to be made within the smaller time frames. Usually, if let's say you had a load level on a 15-minute chart or something that then broke, then you would start, if the trade went wrong, then you would want to see, okay, where's the higher time frame? What's it going for? And then maybe just put that on ice and set the alert for the higher load level. But I never enter on higher time frame load levels. I'll always jump into a smaller time frame to see kind of what's going on. And again, same thing Darren talks about. You want to see this going on. You want to break a structure. If you're at an anticipated higher time frame load level, you want to see something like that on a 15-minute time frame. Okay, now I know it took off from the level I was anticipating, and now I also have a pattern within the smaller time frame.
Yeah. But this is why I think next week, Gatsby, I think UJ is probably, depending on if we've got news coming out, I don't know. I'll have to wait and see what the news is. But, we're inside. Like, if people can't identify that as a daily load level right there, they must be blind because it's now hit it. And look at how many days it's consolidated for. That was the first day that hit it. 1, 2, 3, 4, 5, 6, 7, 8, 9 days it's been consolidating.
Yeah, I mean, you're pretty much just looking to, they're going to run them. And once they run them, just find that swing low. Because it's probably going to happen fairly quick. And again, you don't even need to guess how high is it going to run. You can do 10 to 20 pips if you want, or you can just wait for the high probability. Just wait for that swing low to form. And then, like we did on the Euro Swiss, you can just wait for that swing low to break and then boom, enter right on it.
Yeah. So this is that daily load level that I've just highlighted there. That's its range there. So obviously it's got the wick, but I've just highlighted the body of it. Now, if you go into this is the 4-hour chart. You've now got a 4-hour load level sitting right there. Okay, so if I go all the way back to this now, right back, I can just click this, can't I? Right. So that line there is that 4-hour load level. Right. So if I make that red, okay, we haven't hit it yet, which means there's stop sitting above this. Now, if I go to an hour chart, okay, the hour chart now has got the equal highs sitting right underneath that 4-hour load level right there. Okay, so we need to hit that 4-hour load level. Now, in order to hit that 4-hour load level, we have to take out the stops that are sitting beyond this. Okay, so we're in, this is the range now. So if I go from, if I just draw this now, this is the range of that daily load level. Okay, the red line indicates where the 4-hour load level was. Okay, so now we've got an area.
Looks like what? That looks like 10 pips right there. It could just run there and just smash down.
Yeah. Well, you got to think it could take 50% of that load level there as well, couldn't it? So you could come up 50% into this 4-hour one, which is going to be about
got?
there.
Measure that real quick. How many pips you got from that high?
Let me have a look through there. So if you go to the highest high, which is this one.
Yeah.
Okay, and you measure this. Oh, so 50%, and there's 16, 15, 16.
Anywhere between 10 and 20.
Yeah. So that's that guys is why I think like UJ is probably going to be a good trade this week because of how many highs it's got. The fact that like UJ's just been going up for like well, beginning of January. If you look at that now, you got, let me look. So this was the 5th of January, right? This is where the bottom was, 5th of January. So, you know, now it's going sideways in a load level. I'd anticipate at least half this to fill in. Even if you haven't got clear levels to take your targets, like I can see one right there now. See it?
Yep.
Right there. So, you know, there's a potential target straight away with them equal lows there. You know, on the way down, you're going to smack them ones out. You're going to smack these ones out. Take rid of all this. Take them out. Yeah, man. I mean, that could be a nice swing trade next week. You know, but I think I need to find a way to make the you know, the streams less distracting. So I like getting into having a good conversation with everyone, but I think I need to stop the chat and just keep the questions for after. You know, because it is sort of like, you know, pulling me away from what I really meant to be looking at. But I think like these are the levels, guys, that you want. I know I don't want to keep the call going too long because I know you got like, you know, it's Friday afternoon. We're going to have the weekend coming in, but like levels like this, like he says, like was it Mitchell says, you know, prominent levels. Was it you, Mitch? I think it was, yeah. Yeah, it was. You know, like the more you've got there, look how clean it is. Like I know it is a little bit choppy, granted, you know, a little bit choppy on the top, but overall that is clean. You know, when you look at it, you can see it's a set of highs. You know, when you see stuff like that, and see these little drops, drop there, okay, drop there. It's showing retail that it wants to go lower. So what retail are thinking, right, if it comes back up to that point, I'm going to get in. Then it drops and it just makes them, it reinforces the fact that they're right.
But from our perspective, you know, one thing I always look at, especially for a breakdown, is that swing low still intact.
Yeah.
It ran the highs, but that swing low still intact. So let's say you were trading this higher time frame chart. Well, you don't have a pattern yet. You don't have a break of structure after the highs were ran. All that stuff's still intact. So that's another thing you can look at, you know, especially when you're on the lower time frames and stuff like that. Go look at that. Go look at that swing low. It's still intact, and you got highs sitting above. Those are going to get ran. You know, I mean, it's little things like that that you can kind of keep in mind. You know, this could be a 1 minute chart. This could be a daily chart. You're looking for, okay, just because the highs have been ran, that's step one. You know, you still need a price rejection and a break of structure. So those are things to keep in mind as far as, you know, have all the rules played out. If you're trading just a higher time frame chart, you can't take a trade here yet. You can anticipate the highs to be ran, and then you get that break. Now you're in business.
That's it. But I think yeah, Mitch has just said we could put the chat on mute for the first 30 minutes or whatever. Yeah, I'm thinking about that. I don't know which way to go about it yet, Mitch. It's going to be a case of either like you say, break it down into 30-minute sessions where I can unmute and stuff like that, or you know, maybe I might just keep, well, once we get a few more guys who understand what they're doing with the setup in the group, if they can make it on the stream, I'll get them to answer the questions separate, you know, because then at least I haven't got to really think about it. Because I get quite frustrated sometimes, like whether I'm chatting or on the phone, texting. Like Gaspy's had it a few times where, you know, he's tried to call me on the stream. I'm like, I'll call you back later. You know, because I have to focus, like, you know, and sometimes if my girlfriend comes in or, you know, my dad comes around or whatever, I get really, really wound up because it's like, you need to get
Darren, there's another really good one if you want to pull up Bitcoin's 15-minute. I mean, it's had 2 or 3 patterns play like perfectly.
Okay. Right, cool, yeah.
So that original one ran those highs into the old load level. That was the initial break of structure. Then you had another breakdown. It's coming into this DSR right here, and it's rejecting and just broke the swing low.
Yeah. Yeah, I'm just having a look now. And the fact you like, guys, this is what you need to look out for. So you've got a load level down here as well. Okay, but you've also got to take note, like these are the highs as well. Okay, so you've got to look at all the levels where there's liquidity sitting. Like this to me, Gatsby, that's going to be a major target at some point. And what you'll find, guys, with crypto, you'll find that when it runs these highs out, what happens then? Profit taking happens, and then you'll get the drop.
Yeah, if you go to like a 4-hour chart. So you've already got the run above the highs, then you had a breakdown, and then it just returned. I don't think those may get ran, but you've got that run of highs, you got a breakdown, you came up to the load level, and this is just that second load level test. I don't know if those highs are going to be ran right now.
Yeah.
I'm probably anticipating all this run down here, maybe into that, this load level down here. But again, like we always talk about, we're never fans of that load level right at the structure break. So I think this thing.
No, we don't like it.
This thing's headed to like 38.
Yeah. So go on, carry on. Sorry, mate.
Oh no, I was just going to say, like we talk about all the time, having multiple load levels before a break of structure. I don't like that to hold when it comes back, and I also don't like the fact that it's right at the break of structure. We always like it, and again, there's no measurement, guys, as far as how low it has to be, but you want to see. Let's see if we can pull up the EA one from yesterday, and the EN one too. You just
what he's getting at there, guys, is this, right? Just quickly, Gatsby. I just want to say, like, we don't want to see multiple pullbacks before the break of structure, because it doesn't give us confidence that the volume's behind it to push market through. Right. So, like, when you get shit like that, you want to avoid it. It's like I know Casey. He had a trade similar to that long on US CAD earlier the week. I said I don't like it personally, but if you can get a run and either an instant rejection, it shows that these highs here had liquidity up there that the market was after. Whether these are double tops, triple tops, quadruple tops, it doesn't matter. Just use that as an example. Equal highs could be fucking 20 highs there. It doesn't matter. But what I like to see is a rejection. Then I like to see a pullback there. Right, and then a drop. Okay. Now, what Gatsby was just talking about then is what we don't like to see is price to come down here, then a pullback at structure, right, and then a drop. Or what else I don't like to see is also when you get a break of structure like this, then a pullback, and then a rally away. Because then it's like,
go
on.
Oh, go ahead.
No, carry on, man. I'm done.
Oh, I was just going to say, pull up the EA chart from yesterday when we were on the phone talking about, what we like to see as far as the load levels, like where they take off from. And like, I'll show you the level I'm watching now, but I'll show you the one from yesterday that I liked.
Yeah. So this is where that other load level was we were looking for, wasn't it? But we didn't get it.
Go to the 5 minute. Go to the 5 minute chart. Just to show the scalp we took yesterday, or you took Ian. So you got another great set of even lows building up right above the load level there again. But the one to the left right there.
Yeah, this is the same time I took Euro New Zealand, wasn't it?
Yeah, so that second, when it came down and took those lows again, look where it dropped right into that load level. But that's what we're talking about as far as, if you zoom in right there, that load level was the only load level prior to the push through. See how it was one down candle and then it just drives through and it breaks that structure. And then it perfectly set up those even lows to come down into the load level. So it took more liquidity again. See those two even lows right before the low level?
These two.
No, to the right. Where
you look? Oh, here, mate. Sorry. Yeah. You can
No, you're good.
Mate, if you want. Yeah, I'm trying to keep up with where you were talking then.
Sorry, it's all good. Yeah, so see how those kind of created more even lows above that load level? And then boom, it dropped right into it. And then it didn't, it just went from there. So that's, if you guys want to print off stuff like that, that's what we look for. That's textbook. You want to see that just little drop, boom, right before it goes, breaks the structure. Then it sets up even lows again, right before it drops into it. And then it just doesn't retrace from there. It just goes.
Yeah, so you call those there, run through them and go again. So basically, this is the thing. So sometimes you're going to get this triple, these equal lows here. So triple tap to the low side there. Sometimes you're going to get them left in, but it's all depending on what did it come out of. Do you know what I mean? So if you just got triple lows here, just anywhere on the chart, chances are they're going to get ran. But the fact that this printed here right after it had run these lows and rejected, it's just coming back down for like an equilibrium retest of this point here. Okay, so the chances are it did run slightly through. This one ran slightly through there, slightly. These two ran slightly underneath that one, right? So they did have another stop run there, but a really small time frame.
That's the other thing I was going to say too. Is like when you guys are trying to look for kind of, you can get a higher time frame bias within the smaller time frame based upon, I mean, look at, those are all wicks. They're all wicks, and price immediately wants to push the other way. So you can feel confident, see where that load level that we squared up on, you can be pretty confident that, okay, we already came down, took the lows. We rejected break of structure. We worked down. These are all lows. It's obviously wanting to push. It pushes again. It breaks that structure. And then look, I mean, it barely wicked into the box because it wants to go the other way. So you can see just from studying charts like this, what the institutional order flow is. I mean, it wants to go up. It's signaling everything that we want to keep pushing higher.
Yeah.
So yeah, that would be your lowest risk entry. And again, it just takes a little patience. That was all through.
The way I look at it as well, Gaspy, is also like I've mentioned it in a few videos. Look at the direction of the impulses. So the up, and then it's choppy on the way back down, and then an impulse, and then it's like choppy on the way back down, and an impulse, choppy, impulse, all the way up. See, choppy sideways, impulse up, choppy down, impulse, choppy, impulse, and it just goes on and on and on. Obviously when you start coming into this point, but obviously to get the initial pump going, this is probably going to come down and retest a higher time frame level somewhere. But
I got that one right there on the left.
Yeah, this one here.
Nope. Yeah, that one right there. See how it's putting in those even lows again?
Yeah, right there. So this is what I was saying. So like you may get, so like in this case, what he's looking at here is this level here. Okay, to potentially run these, grab the liquidity, activate on that load level there. But like here now, this hasn't come out of just in a reversal. Do you know what I mean? So these lows are probably going to stay intact, and these ones are definitely going to get ran. That's the difference.
Pull up the 1 hour chart. You may be, because you've already ran these lows, it may be targeting these highs now.
Yeah,
it may be going for a higher time frame reversal.
Yeah. Well, look at these now.
Yeah. That's what it's going for.
Well, all along, Gaspy, we were looking at these ones up here. Remember?
God, EA was just a bitch last week. I mean, look at how many times the pattern failed, but it didn't fail because we just weren't. That's why you see to the left there was 3 sell patterns in this consolidation over here, and what it kept doing was it kept going up and driving into those because it needed the liquidity. Again, it's putting in lows, but you have to understand why it's going up there, because what it needs to do is it needs to build liquidity into the algorithm in order to get that big push down, to break through all the lows. It needs to basically accumulate all the stops so then they can own the asset to then drive it down quick to get the higher time frame liquidity.
Yeah. But now, so Mitch says, let's have a look. Yeah, he says talking for 2 hours a day, multiple times a week would drain him. Yeah, like honest to God, Mitch, right? When, like I've said to Gaspy loads of times, I'm hanging, like my throat is killing. I'm tired. By the time a trade comes up, I just cannot be bothered with the charts anymore because I'm just so tired of just talking. And I'm not very my girlfriend hates it. Like, I'm not a very big talker. Like I'm not a big one for communication anyway. I'm quite a quiet person. So to go for like 2 to 3 hours, this is why I tried to force the New York stream on in time for a couple of hours, because I used to start at 11 a.m. UK time, which was an hour before New York Open, and then you're not really looking for a trade until at least an hour into New York. So I was sitting there for 2 hours talking to people, then I'd have to try and trade, and normally by that time I got so tired and frustrated I'd already took a losing trade way too early. Same, it happened with CAD CHF last week. On the stream, took a trade 12:30. Should have been waiting until about 1:30. Got caught up in a whipsaw and it eventually went the other way. So and he says plus the trades will likely have been taken then, so you can break them down. Yeah, I think what I might do is, I don't know how I'm going to do it. Yeah, I might get my trading out of the way first, get my setups, post them in the group what I'm looking at, and then maybe do a stream as they're playing out so I could talk through them, because like I know some people in the group are trying to use it as a signal service, and I don't want people to be doing that, because it's like, if I take a hit one day and someone's gone, fucking out, looks like a really good trade, I'm going to copy it, and then they've over leveraged and they blow their account, then they're going to come at me for it. So I don't want people using it as signals. I'd rather personally get my trades on so I can concentrate, then open the stream and say, right, now we can talk about why I've took this trade and, break it down. But, I do the trader development series as well. See, so it's like, there's always a recap video or a TDS video or whatever that I'm doing to try and get it going. But we've got to sort of try and work a way of doing it, because when you're trying to look for trades, really that should be your stage where you shouldn't have any distractions. If you go to the group and you scroll down to, I think it's resources, go down to resources, and you'll find trade plan. In the trade plan there, the one I put at the top, the trade protocol is, have you got distractions, yes or no? Well, if you have, don't trade. And all the way down, have you, it's step by step, but really I'm sort of going against my own trade plan at the moment, because I'm doing the streams and trying to sort of add more value to the group. It's starting to cause a bit of problems with my trading. Like I've taken some brilliant trades this week with what do you call it? London Open. I've had a few good, I don't normally trade London, but I've had some really good setups, and by the time the stream comes on, I'm already in the trade, so I don't want to be taking anything else. So it's just trying to work out how we're going to run it, really, because like Gatsby's known me for how long we've been talking, Gatsby? A couple of years.
Yeah, about 2-3 years, I think.
And I've like I made some videos on the setup, really just to help. Like Gatsby had an idea of the setup before I did the videos, but you fine-tuned it using the load level before the break, didn't you? So you wondered why you were going into a little bit of drawdown before getting the trade.
Yeah, I mean, we had kind of touched base a while ago. I mean, kind of the setup was always our thing, but then you kind of ran with it more and, refined it with the load level. And I was like, oh yeah, that makes sense, because that's, they're driving it down, but then they're taking off from the place where they did their other loading. That's your confirmation. So really we were able to refine it to an area that was really, it was almost like double the confirmation. It was like for them to then drive past that level just didn't make sense. You got it to the point where it was just, it's not going to happen. I don't want to ever say something's 100%, but once you understand the order flow of things, it just wouldn't make sense for them to then break that level if the price continue.
But now, like with the group, like when I did them videos, Gatsby, it was only to help really a couple of people like understand my trading a bit better. And like I didn't expect it. I was no way expecting to start a trading group. And as we started to roll with it, we're like, oh yeah, we could do this, we could do that, we could add this into it, we can do this. And it's just like, it's so much to manage like at the moment, because there's so few of us trying to manage it, even though like, there's only 40 or 50 members in the group, but like it's a lot to do, and you feel obligated. Like I said, when I'm on the live stream on a New York, you're trying to force trades because you're almost obligated to show people it works. Do you know what I mean? And then what you're doing, then you're pushing trades. And like I've took some really good trades on stream, but I've took a few really stupid losses as well. And it's got to the point now where I'm like, fucking hell, how can I run this in a way that's not going to, impede on my trading? Because at the moment it is, the account went, I started the trading account like the beginning of this month, the funded FTMO account, and I was at like nearly 4K profit. And then suddenly I get into the streams, I start taking stupid trades. It went down to like £500 profit, and it's sitting at about $2,500 now. And it's just gone up and down and up and down. I'm like, fucking hell, I can't control it. It's just fluctuating so much. So I'm like, I've got to do something about it, but I don't know how I'm going to do it yet. You know, but like Mitch, all I'm saying there really is, you know, with the streams and everything we built so far, we didn't expect to even begin a trading group. It was literally just all it was meant to be is a few videos to help a few friends out, and that's what it was going to be. And then suddenly people said, "Oh, I love the setup. Can you do some more videos? How'd you do this?" And then my Twitter blew up, my Instagram blew up. I was like, "Fucking hell!" That's when I did the 15 video series then, and then it just sort of spiraled out of control from there. Then, you know, but yeah, what are you gonna say, Gatsby?
No, I was just gonna say, you know, again, it's all the trade psychology stuff where it's like, you know, obviously, anytime somebody's paying their hard-earned money to be in a group, you know, we all feel that pressure. We want you guys to succeed. We want to show you that it does work. But the other thing that we always forget to factor in, not forget to factor in, but it requires some patience sometimes. But man, when it's there, you know, and it's like, especially when you're getting new members and, you know, we want to show everybody that it works, you know, not just in past charts, but it's cool to show it live. You know, I mean, when it happens live, you can see that, hey, there's no way to manipulate this. Like this is the price action that's happening right now. So I think sometimes maybe it's just a view like that, but you know, it's all part of the group being new and trying to show everybody, you know, that the pattern does work. But I mean, I think everybody's been able to back test it enough to see that, you know, if the stars align and everything's right, you know, you're seeing it play out.
Yeah. Well, I was talking to Rusty. I think it was yesterday evening. I can't remember. It might have been this morning. I can't remember. But we were saying that, like normally when you've got a heavy news week, we normally avoid the charts. You know, we just go and do, you know, either some back testing, forward testing, bit of studying, or, you know, just get on a call together and have a chat. And, you know, for some reason this week, it's like we haven't avoided the charts and we've just been smashed to pieces, you know, because it's just been a crazy week. And like, you can see it now, even now, like I've just gone into the Discord. Well, I'll share the full screen now. But I've just gone into the Discord now, and there's like members' losses, and it's like I think it was Seth. Seth just posted this now, so that was the load level there that we were looking at, but it's just gone straight through it. And now this is just it's a mess. This week is just absolute carnage.
Yeah.
Do you know what I mean? So we were looking to maybe getting down here to go and get these out, but I'd be more interested in getting these highs ran, rejected, and then going lower, you know. But at the moment now, it's just the fucking market's battering people, and this is why I stepped away today. I was just, I'm not even looking at charts today in terms of trading.
Again, it's a Friday. So again, we talk about all the time that Tuesday through Thursday, the time frames, that stuff matters. I mean, I forget, it was like a couple of weeks ago, there was a perfect setup, and you know, you were just like, man, if this was coming into New York, I'd set a limit here. And I didn't really understand, you know, a lot of that, because I traded a lot of crypto and stocks before and never really paid attention to how high the probability can go when you're dealing with certain time frames. And yeah, that New York Open, I mean, if it's coming in, if the setup's there and you're coming into that 3 hours, that first 3 hours in New York, I mean, your probability is going to continue to go up. You start seeing patterns super late in the day. Tokyo just opened, you know, it could play out, but the probabilities are going down. So again, it all just has, Mitchell, I saw that too. That other low level. I actually just closed out my trade here because I don't like, again, this is kind of the stuff we talk about, is that if you enter at logical levels, like I entered at 138, 315, and I closed it out because look at these lows, look at these even lows it's putting in now. It didn't want to run away. You know, you want to see that run away. And it's kind of just, and again, I'm on a 1 minute chart right now, but and I tell Darren this all the time, you know, I'm kind of OCD when it comes, I'll put stuff with 5 pip stop losses, because I want to try to get that right on there. And then, you know, if I don't like how it's setting up and it's putting in these kind of lows again, I'm out, you know, and I'll revisit it later and deal with it then.
Yeah, Mitch says GU has the lower load level that mitigated the previous load level that broke major structure. So he's talking about down here, I think.
On which one?
I think he's looking at the one down here somewhere, probably.
Yeah, so that little, okay, so again, this is that video we kind of did it on, is remember guys, with that DSR like that, you're retesting 2 levels. So again, this isn't a trade now that I'd probably be wild about. I would definitely wait for more structure to break on the right side of the chart here. I wouldn't look for another entry here because he's right. That first little DSR, it broke. So now it can kind of go either way. You know, I mean, it can continue down and take out the lows. It could reverse here, acting as the DSR. You know, a true DSR is retesting 2 levels of structure. So, but again, for me, I'm just out. I don't like where it would kind of be coming in time-wise if we had something going into the weekend too. It's just, for me, there would be plenty of opportunities to enter that on a reversal next week.
Yeah, he's saying back on the 9th it had mitigated previously. Yeah, like, to be honest, like we said, this week's been, well, I don't know how much fundamentals you guys follow, right? But we're currently in the process of a global financial reset. Okay, now we've been expecting for what, 3 years, Gatsby, maybe the charts to go mental at some point. We've been thinking at some point in the next 3 to 4 years, the charts are going to go insane. And I
feel
think
like you're just going to wake up and things are just going to be nuts.
Yeah. And I think we're starting to see the pricing in for all that now, because we're going onto a digital system, moving away from cash. You know, and I think this is probably part of it. You know, I don't know, is it? But I think we're very, very close to what's due to happen now. So, you know, we'll have to wait and see how it goes. But there's people dropping forex charts in here today. I'm like, fuck, you guys are nuts. Like trading on a Friday when we've had such a bloody crazy week.
Yeah, I mean, there's just so many. That's the other thing too, is like when you get crazy weeks like this, there's so many levels left open, and it's just not super clean. You know, I mean, it's like, well, it could go there. If you start talking in the coulds, woulds, maybes, just don't trade. Just don't trade. If you don't have it completely pinned out, because I'm telling you guys, when you get that trade, when you get that $2,500 trade and you mapped it out, you know, like we always talk about being a sniper. I mean, you get the gun out, you're polishing it up, you're just waiting. And when you strike, you'll know. I mean, it'll, just like that EA trade we showed yesterday, the time frame was right, the load level was right. I mean, it didn't, the drawdown was not there. You know, I mean, it wicked and it was gone.
Yeah. But look at this, just quick bang, straight down, grab it. You know, Mitch says, is the chart more mental than when Trump used to tweet? Yeah, it's the dollar used to play around when Trump would tweet, but what we've seen this week's been, I mean, EA this week, Gatsby's just been a bloody mess, hasn't it? Like Euro Aussie. You know, like all week, we were like, yeah, okay, we've got to run on stops here. We've got to break a structure, took it short, stopped us out. Okay, we've got another stop run. We've got to break a structure, went for retest, run us out. And it just fucking all week, bang, bang, bang,
well, here's
bang.
the thing is that second one, the second one was the actual call. This is the one I gave Bass. He took that. I didn't, I was working, but it came down. And then if you go into an even lower time frame, the retest level, like it just played around so much. I mean, it's tough on these because that stop loss for me would have been, we all got stopped out because I just wasn't comfortable throwing it above that wick. That was too much. I think it was like a 35 pip stop loss if you would have thrown it all the way above the wick.
Yeah.
So I think it then came back up, stopped me out, and then just when that news, that's right, it was the day that all that news came out. And Bass hit me up in the group and was like, oh man, Gatsby probably, you know, and I was like, no, I got stopped out again.
Yeah.
So like right here, if you go into like the 5 or 15 minute chart, you'll see where, the DSR right there.
So it's looking at this load level there, isn't it?
Well, it went for that one. But then when it broke down again, and it came down and took this low out, there was a load level, I think, in there, yeah. Because so we thought, boom, there's your DSR. And then that's when the news broke out. Or no, was this the...
Yeah, so the one we were looking at, I can't remember where it was now.
It was the first one. So it was the first run above. Then remember you were on your phone and I was like, I don't know, it's putting in those even highs. I don't like those. And then it ran up. It ran up into the target. Bass got that one.
Yeah.
And then it came down and it broke the swing low again.
Yeah, here.
So then we said, okay, there's your DSR right there, right?
Yeah, that was it. Yeah, and Baz came to. Oh, did Baz trade it? I don't know, but I think they were trying to get an entry off here, so around this level.
Yeah,
here.
so Bass was trading that one. He took the first one, profited on the bottom of that swing low, and then he said, okay, here comes the DSR, and then it just boom, sprinted right through it.
That's it.
It was just a mess. I mean, that stuff's gonna happen, you know. I mean,
This is what I mean. Like you don't normally get weeks like this. It's very, very rare that you'll see this. Like I dropped an ICT video in the group earlier today, and I was saying like, you know, this sort of expansion of structure, you don't normally get this sort of thing. You know, and when you do, it's very, very difficult to start to trade it.
Yeah, I mean, if I ever saw something like that come out of it again, I'd probably just be done with it.
Yeah.
You know, it's lesson learned. You just, you know, when it's clean, it's clean.
Okay, Mitchell, will speak to you soon. Yeah, sorry, Mitchell just had to jump off. Casey's asked if we can explain the global reset. So, Casey, do you follow cryptocurrencies at all? So I'm just replying to his, he's in the chat, he is, Gatsby.
Oh, okay.
So like, if you don't follow the crypto stuff of what's going on, the what is it? The World Economic Forum. So if you go to Google and type in in fact, let me just find the website. I'll drop it in the chat, right? Because you need to see what these guys are doing. These are the elites of the world. Right, and they are in the process of doing a full global reset. Right, that's not just currencies, that's everything. They're trying to push it to the point where, Ash, you obviously know what's going on then, right? So they're trying to push to the point where we will no longer own cars, houses, or anything. You will rent it off the state. So the government will own everything. They're in the process of trying to push the human tracing. So that's where this whole COVID situation's kicked off with. So we were saying, fucking hell, Gatsby, it must have been, it was getting on for 3 years ago, wasn't it? Way before this COVID stuff. We were saying that there's going to be something major that takes place to scare everyone away from cash because they want to go to a digital economy. And when COVID was first announced, we were like, this is it, because everyone's scared of using cash because they don't want to touch cash. Now, if you look at your shops, your local supermarkets and people like that, a lot of them now are trying to move away from cash to use card, right? So they're already pushing that sort of digital economy that way. And the reason behind it is one, because it's efficient for transactions, but they can also, they can keep track of absolutely everything. So where people used to do like what we call cash in hand jobs, you know, where you'll do a job and you'll get paid cash and you can hide it from the state. You then have to pay tax on everything because there's a trace of it across the board. So in the next sort of 12 to 18 months, I think cash will probably be wiped off the face of the planet. You know, it'll probably be still, you know, in people's hands, but there'll be nobody that accepts it. So it'll become obsolete. Now, in terms of the rest of the things that are going on, and there's a company called Ripple who are currently partnered with, you know, I think it's over 50 central banks. They're partnered with loads of thousands of institutions and all that. They're the ones that are currently in the process of looking to take over global payments, to take it off SWIFT. You know, and that's what's going on in the background, but nobody sees this because all they see at the moment is the media pushing, you know, vaccinations and shit like that. Now, human tracing was another thing that they were trying to push, or what the plan was to be able to track where everyone's going. And they're in the process of doing that now with the COVID passports, right? So you have to have, you know, a vaccination to be able to travel. Now they can trace exactly where you're going, right? So eventually it'll get to the point where, you know, you won't be able to go into a supermarket unless you've got a COVID passport, you know, and at that point, then you're really in the shit at that point. Like, so yeah, it's very, very interesting of what's going on, but I think a lot of people are asleep. You know, they're not really paying attention to what's really happening in, you know, behind the scenes. And they all think that the government's got their best interests, which is an absolute load of shit. So, I think, well, Gatsby, there's way too much to talk about with what's going on.
That could be a whole discussion within itself. But, it starts with, again, I would assume that a lot of people who join our group are pretty open-minded to it, because you have to basically accept the fact that the markets are manipulated. And, there's a lot of people who disagree with me. They work in traditional finance and they say, well, this company's earnings are this and this company, and I nod my head and I say, you know what, hey, if that's the reality you want to live in, that's fine. But I can show you time after time after time of the chart lining up and then news breaking out. Like I showed, I think in the free group, I showed the MoneyGram trade I took at $1.35. Well, yeah. As soon as it went, MoneyGram partners with Uber and Ripple is doing great with MoneyGram. And it's just however people want to view the world. I'm not here to burst your bubble, but sometimes it's hard to grasp the truth of what's happening. And the fact of the matter is it's manipulated. There's no other way. The proof is in the pudding. And, there are people who control things. It's like I always talk, this is the last thing I'll talk about it, but I always say, it's funny that people don't think that, when you're in a business, let's say you're a lower level executive, you have company meetings, right? Where there's people at the top who discuss the plans of the company, right? Yep. So don't you think that the richest, most elite people in the world have those same meetings and discuss what the plans will be? Of course they do. Yeah, that's where that comes from. So yes, things are planned. It's something to just, again, I'm not calling any dates. I'm not saying this or that, but it's just something to be aware of and know that, I don't think that they have our best interest in mind. They know what's good for them and they're going to push, things to make it better for them.
Yeah. Yeah, I see. I think this is, Ash is saying in the chat, a huge rabbit hole if you're willing to go down it. I think it's, Ash, I don't know if you follow, there used to be a group that we're friends with called SPQR Media. Optimal Cap, yeah, it's all recorded yet. Don't worry about that. So SPQR Media are on YouTube, or I'll put it in the chat there so you can find it. They went through went down some very deep rabbit holes to the point where they started to uncover certain things, and they were told by, non-named individuals to stop going down that hole, because it was certain points where they were no longer protected. Right. So whatever they were uncovering, they were told by people that they couldn't disclose who they were, but they were said you need to stop going down that route.
Like you don't want to be involved in that, basically, is what they were saying. And at that point, it's kind of like you just nod your head and you say, okay, it's not worth it. Basically, it's not worth your life. It was getting to that point where it was like, they were uncovering things that it was incredible. We were in on some of it, and I totally removed myself. I was like, okay, good to know the info, but I'm out. I'm out. I know where this is going. I don't need to tell, I'll let people know if they're interested, but I don't need to be broadcasting this to the world. So I then become a target because they're worried, I don't know. It was a weird time.
Well, they had managed to connect a company called Vanguard, which is owned by people like the Rothschilds, the Rockefellers, the Clintons. And this company owns almost everything on the planet. So if you've got a public company where you've got shares in a company sold on the market, they own either part of your company or part of a company that owns part of your company. So they were connected to absolutely everything. It went down the rabbit hole of even like the educational system was it's controlled to the point where they don't teach you how to invest and create money because they need you as part of the system that works. You go to work, you pay your taxes, it keeps their cash flow going. And then what it turned out at that point, it was looking at the educational system. They owned all the the qualification bodies. So, people at City and Guilds and all the, the people who give you the qualifications, they own all that. So they own the universities, they own the schools, they own the system that teaches you. They decide on the criteria, what the schools can teach, what they're allowed to teach, in order to guide you down that hole where you become a slave, and that's all you are. You know, and that's the sort of stuff SPQR Media were uncovering. What they found was phenomenal, and the stuff that they connected Ripple to, every stone they unturned, Ripple was underneath it in some form.
I think the thing that did it in for me was the Liberty Reserve stuff.
Yeah.
There's patents that obviously go back into the 90s for blockchain. You know, I mean, Bitcoin, everyone wants to say, oh, it came out at the financial crisis, but nonsense. That stuff. And there's documents linking it to the NSA. It's just a giant web. And Liberty Reserve was a company that got seized. They were basically doing instant transactions, basically. Let's just put it this way. And they were basically using XRP before XRP was something. And they were working with the banks. And obviously, you know, the banks were charging people an arm and a leg for transactions, and they were doing it basically for free. You know, so they had this whole thing. And then as that company got shut down, then it tied into HSBC and all these companies that got hit with like billions of dollars in money laundering scandals all happened to be Ripple partners. They were like the first people that, you know, started working with Ripple. So it was just this whole thing, you know, I mean, you can speculate on it, whether it was, you know, Liberty Reserve was Ripple before Ripple was Ripple. And then they got shut down and the government said, this is what you're going to do. You're going to play ball and we'll let you guys basically develop this for the world and not keep it private. And that's kind of where we all exited and said, okay, we're good now. We got the info we needed and we'll shut it down now.
Well, it's not just that. It's that when the government shut down that Liberty Reserve company who had that technology, they shut it down, and within a year of shutting it down, Ripple was formed as a company that had the exact same technology, which to me says that I think, you know, the Ripple's probably government controlled, like, you know, but whatever. But yeah, this has gone from forex into you know, global resets and shit like that. So, but it's all recorded, so you can all have a listen to that anyway. But you know, I'm not gonna drag it on anymore, guys. It was only meant to be a 20-minute call, but I think we're probably running into fucking hell, probably an hour and a half now. I don't know how long it's been. But yeah, well, people can have a listen to it if they decide they want to listen all the way to the end. Great. If not, just switch it off at any point. But at least the information we needed to get to the groups all there with the finding the most liquidity levels. So that's it, I think, guys. I think we'll call it a day there, Gatsby, I think.
Yeah, sounds good. Thanks for tuning in, guys.
I'll catch you all later. And you, Ash.
You too, Ash. Thanks.